Oh yeah. Bringing in a little bit of a different type of content right now. And I'm not going to lie, I think this is actually something that's going to help out retail a great deal. And this is going to be added directly into a new, I guess I can call it the Arc University playlist inside of the YouTube platform, right? So as we speak, I'm actually adding the description of an RSI indicator. Okay, so exactly what a relative strength index means, right? So I think that providing some of the knowledge behind strategies and tools, at least in in more of a brief manner, should help retail out a bit, right? But I'm very happy to stream here tonight, team. And Cryptic Trader is not in just quite yet, but he should be in here in the next few minutes, and I shall get us connected, right, team? So, but what is up, everybody? Thank you so much for stopping by. I really appreciate you. And we're going to be talking about some risk management, right? So for day trading, let's say, I think that you'd be able to use this on a daily basis. For example, how we tend to day trade every single day, right? So these strategies, these parameters I'm going to show you, although in different formats and in different scenarios, can be used for your advantage, okay, to protect your longs, right? So let me just go ahead and add a little bit of some background tune here so that we can get rolling, right? Anyway, so let's see. So chat James is saying I need to most definitely watch this. It's my only problem, and I to be very honest with you, I agree. It's something that I think every single trader probably. Or I say not every single one of them, right? The majority of the traders do tend to figure this or use this as or not use this because it's kind of a crutch or it's a little bit of taboo, or it could be the psychological impairment, right? Meaning that you are afraid of actually finishing a trade with a loss, and that's it's kind of taboo, right? That's what I mean by it, right? So not admitting to that to the failure of a plan. And yes, I'm saying a plan because that is absolutely what it boils down to. So if we can understand and if we can stick to a trade plan, then we'd be able to manage our risk a little bit better. So it'll start from the very beginning. What is the current setup? What are you looking at, right? First of all, you got to gauge your risk based on the type of asset that you're trading to. So are we looking at a micro cap, micro float? Are we looking at anything just regular? I mean, just in a low float family? Are we using a low float stock, or it's going to be a small? Is going to be a mid cap, large cap, or blue chip? What is it? Are we trading indices? Trading crypto? What is it? Right. So every single type of asset has its own risk to it, right? So if we're gonna, hey, what's up, Mashka? Good to see you here. So if we were to trade micro caps and micro floats, and we can gauge a rule, meaning that if we know that this is the biggest risk in the markets, then we should probably set a standard here and say that if we're going to trade these micro caps, then my daily position for trading it shouldn't exceed more than XX amount of my allowable trading portfolio. So let's just say that your allowable trading portfolio is $10,000, right? And you decide that your max entry on any given position being like the A+ setup, you will not exceed $2,500 of that entire portfolio, and that's already a lot of money, right? You can lose a lot even in that type of metric. So let's just say that that's your max out A+ setup. You want to identify whatever conditions you have as an A+ based on whatever asset you're trading. So if we have an A+, in my personal opinion, we're trading either futures contracts or we're trading large caps, or even they could even be considered the mid caps too, right? Those are safer plays and often tend to play out pretty nice in the financial markets as far as price action is concerned, right? So meaning that you'll have a higher hit rate or higher strike rate of a formation of sorts to play out a little more like it should the higher the valuation of the asset, right? So, guys, Cryptic Trader is in the house right now. So let me just go ahead and kind of dim the music down here and see if we can actually get this guy to say hello. Brother, let me know that you are there and say hola.
Hola.
Nice, nice. Team, please let me know if you can hear Cryptic Trader speak in the chat. Did you hear him say hola? I just want to make sure that we can get his voice in there and everyone hear him.
Hola, Lorraine.
Is he here?
Nah.
Dude, today, man, it was just a silly time today. He was especially edgy. Costco Chicken saying yes. Okay, cool. Aiden, you can hear him too. Cryptic baby.
He was on his period today.
Oh, dude, he was so angry. Matchka, you can hear him. That's amazing. Okay, so just in case, let me see if we can actually switch over like this. Okay, cool, great. So yeah, that screen that you just saw there, that's actually. I'm sorry, it didn't come up. Oh, here we go. All right, so yeah, this screen right over here is in the event to actually, dude, Cryptic, you can just leave your screen up right now because everybody's watching my YouTube screen. So whenever you're ready, we can just share your screen. So just you let me know, right? But you can just share it now because I'm not going to be sharing my screen here in the Discord. So everybody's going to be looking. Are you looking at the YouTube by any chance?
I'm looking at it.
Okay.
Yeah,
so what I'm going to do is this. Check it out. So whenever you're ready, I can go ahead and kind of share the strategy, or I'm sorry, share the stream back over to you. So you can technically just have your screen ready for whenever you want, as they're going to be observing here from the left side of my screen. So yeah, I was talking to them about risk parameters, right? So basing the my personal thing is to rate a trade based on its based on if it's a low float, if it's a higher valuated stock, large cap, blue chip, tend to be safer plays, right? So if you're trading micro floats, I think that the best case scenario would probably be a rating of a C+, including a fundamental catalyst in everything, right? So in my personal opinion, that is, right? So if you're looking at a large cap or a blue chip play, and you have all the technicals, statistics, formation analysis, you have the geometrics, whatever the crap you're thinking of, that play will not exceed a B+ trade unless you have a fundamental catalyst in it, right? So if we have the fundamental catalyst that we know can launch this thing to the moon, it's a blue chip play, and the technicals and all that good stuff meet, then that's when you can dive into your A trades, right? And that's where you can decide how much of your portfolio or allowable trading position you can allow yourself to trade in that perspective. What do you think, Cryptic? What do you think? What say you behind that the rating system, and if you even have one?
No, I don't. What I do is I have the same risk for everything. See, what you're trying to do is you're trying to be consistent. So being consistent means that you could what you want to do is you want to be able to take like 100 trades, 50 trades, 20 trades, and see if you have an edge. And the only way to do that is to have the exact same parameters on every trade. So I actually have a max risk. So it could be, in my case, it's a dollar amount. So it could be like, for example, let's say my max risk is $100. I take every trade with that in consideration, okay? And that'll tell me in option, for example, with options, how many options I could take, how much of a pullback I can support. If I want a longer pullback, I take less options, for example. And so all that is done instantly. I do that instantly. Now, you can add to your risk a little bit, and I think that's kind of where your A+ goes. But I still would start with the same parameter always, no matter if it's an A+ or B+ grade. For example, let's say 5 options, okay? I could stand a pullback of 10%, let's say 20%, okay? And if my options are always within one number, what was I was thinking about the numbers? Oh, never mind. If your pullback is 20%, you know that if 5 options at 50 cents, let's say that's your risk. Okay. So no, you could pull back 20 cents, you could pull back 50 cents, whatever. Now, if it's a trade, I'll start with 5 options. Now, if it pulls back to 20%, I might add 5 more. But that's it. And I'll just let it ride. You kind of understand, you're always at the same risk. Every single trade is at the same risk.
Absolutely.
And
So
so
what you're talking about is
you,
actually the 50 cents, just so that they understand exactly what they mean, is that an options contract, if it's displayed to you at $1, that's actually $100 because there are 100 shares within the contract. So that would be $1 times 100, and it'd be $100. And if he's talking about a pullback to 50 cents, that would be a $50 loss. But we're talking about also, please remember, it would be a 20% loss in his case. So this would be honestly what, a $70, maybe a $70 contract, right around there.
Correct. No, let's use an example. Like if it's $1 stock and it pulls back 50 cents, 50, like exactly what you're saying, you could adjust based on those parameters. So you always keep your same risk, but you could up the amount of shares or lower the amount of shares so it stays the same. So you could always manage a 20% risk. Okay, let's say you put in $100 for a contract. Your max risk is $100, but that's called a what I have, the way I set it up is there is a technical risk and a max loss risk. The max loss risk is if I have 5 contracts, $500 is my max risk for that trade, right? Mm-hmm. But I'm only going to allow that to pull back to 30%. Okay. So my technical risk is what? $300. And that's how I calculate it. The most I could lose is 500, but really my strategy allows me to lose 300 and I'm out. And I'll just go back in. So it breaks down my trades, and that way I could see if my strategy is effective or not. I'm never going to take 100% loss on anything. I'm only going to take a technical risk.
Okay, and it's a risk that you allow yourself to take, that you know that you're able to take it and you're going to survive for the next day of trading, so that's okay.
Correct. That's why when I kind of say like, for example, I don't trade options. I do trade options, but only in SPY because I don't need to because I have a big account. Mm-hmm. Now, I'm trading the same stuff you do today, like Meta. Okay, I traded Meta just like you did. I traded it I actually use puts. Okay, so I'm getting 500 puts. Okay, now it's a what? 200. I don't remember how much it is, but let's just say it's a $200 stock, right? It's more than that, but I'm risking $100,000, right, on those puts. That's my max risk. But my technical risk is $500.
So even still, even with a larger position, your bottom line is always the 500. Position.
Exactly. And I'm going to make sure that my 500 allows me to have a max pullback of $100 or whatever. Sorry, of $1 or whatever I use it based on ATR, but I allow it to have a maximum pullback, which pulls back and I'm still good. Now, if it's a riskier play, what I do is I'll start with 300 and then on the pullback, I'll add my other 200. Now that gives me a longer stop loss, but I'm still risking 500. So no matter what, I'm risking $500, and it's the same principle with options. If I have $100 to risk, okay, I could buy two options, okay, 2 out of $1. So I'm doing a max loss of 200. But my 100 risk means that I could allow a pullback of $1 on everything, and it's still and that allows my plays to work out. That allows for pullbacks, and that allows for everything to go. And see, remember, there's 2 ways to do it. What I'm willing to risk if everything goes to crap, and what I'm really going to risk. And that's why stop losses are so important.
Your max loss.
My max loss. It's so important. So,
and that'll help you survive for the next day of trading. It'll keep your equity.
like today, people with a $20,000 account, or most people in the Discord have $10,000 or $5,000 accounts, right?
Yeah.
They should not be taking a $500 loss on a meta trade.
Yeah.
They should not be doing that. That should not happen. So what you do is you establish your max loss based on your portfolio, which should be 1%. But since it's a small account, I'd say 2. Okay, so whatever it is, let's say your max loss is $200 based on a small account.
Mm-hmm.
Okay, 500 for me is still a little bit because I just play it safe. I could go like 5,000, but I just play it safe because I'm trying to be consistent, and I'm fine with making 5 to 10K on a good day.
We can reposition if in case the positioning is wrong. We just exit the position and reposition again based on how the pullback goes. Now, Cryptic is mentioning like a 30% or 20% pullback, and that's just because of the volatility that an options contract tends to provide, right? So it's not the same for trading in shares. So trading in shares has its own separate parameter, and you're very much a lower amount of percentages. It's all based on an average true range on your whatever ticker that you're trading, right? So or it can be based on a range breakout, and it also has an inflection point or an invalidation area, right? So for example, go ahead, brother. Please take over.
Yeah. So that's the difference, that with stocks, my pullback is based on an ATR. Mm-hmm. So for Meta, I allow $1 pullback, $1.25 pullback, because that's my ATR. It won't pull back that much. Honestly, if Meta were to pull back $1.25, it's going to be hitting the point where it's going to reverse anyways. Exactly. So I'm very low risk. I'm very low risk of my max loss hitting, and it's still going down on me. If my max loss hits, then most likely it's going to reverse. I mean, I'm probably like maybe 75% on that. That if it hits, it's going to reverse. So my trade went to shit anyway, so it doesn't really matter.
Yeah, because you're taking a small. That's important. Yeah, you're taking a small loss anyway, so we can go ahead and validate a support, even if it's going to reverse. It still may come back to it in that validation or confirmation process of supports. So like for example, on a 5-minute time frame, trading shares to a bottom line support of the EMA 200, you can set it to where it's slightly below it, depending on how far away it is. But you're setting it on a manual basis too, right?
And it's always behind support or resistance.
Yes, absolutely.
But that's the thing with options, you can't do that. With options, they're so volatile that you got to give yourself more leeway.
Yeah,
that's why somebody asked me, I do percentages. Do you? No, I don't, because I trade stocks. I'm at my 500 risk, but I'm feeling really edgy. I'm at 1,000 risk, and that's it. With options, you do have to do percentages because it's so volatile.
Yeah, so volatile, and at a given, in a split second, you could be from 5% up or minus 15% to plus 30 or plus 40 in a split second.
Like the meta trade you did today. I know you have a bigger risk tolerance.
Mm-hmm.
Yeah, no, that's the second one, the one that failed.
Yeah.
I know you have a bigger risk tolerance than maybe others here, but if you had you traded that with ARCa and it fails, and you have your 20% stop loss, you wouldn't have lost 500 or $1,000 on that, unless you're going in deep, But
exactly.
Most people here aren't.
Exactly.
And the people that for this matters aren't doing that. So what would happen is, let's say you took your $200 loss on that and you're out. Okay. Well, you could come back in. And that's what you got to remember. $200 loss is nothing, because you could come back in and make it up. You could have set up for the reversal, or when you saw it was filling on ARCa, you could have flipped it, even though he didn't. And then you just make it up.
Yeah. So leading a second trade to hedge against the potential loss, meaning making it a strangle, would honestly help save that. Is just to mitigate that to oh man, yeah. I can see the level of difficulty that I can get into. So maybe the easiest way would be to have a bottom line foundation of the stop parameter, the risk parameter, instead of getting super creative. right? Because I think the getting creative in the markets would actually pertain to someone who's more agile and has the knowledge over how the trade actually works
So,
and how price
so
action moves.
it's simple. Create your risk, make it what a dollar amount,
Hmm.
and then when you get your option, calculate the percentage that we equate to that dollar amount with a pullback. It's a quick little thing if you could do the math in your head real quick.
Yeah, yeah, absolutely. And there's no
So,
way to really tell like how far it's going to pull back because an options contract
no.
is completely dependent on volatility.
But it doesn't matter because
You
if
have
it
it
pulls
set.
back 20%, you're out.
Yeah, you're
And if
out no
it
matter
pulls back
what.
another 20, no matter what. And then if it pulls back another 20% and it comes back up to that point, you're back in.
Exactly. You
So
reposition and
so
just let it ride
you're
again.
repositioned. Yeah, and now it already did its pullback and now you're ready to ride. So
Exactly. We have Aiden wants to ask a question. So Aiden, go ahead and post a question up real quick. And while you do that, I will point out that there
oh,
is yeah, go ahead, brother. Go ahead.
one more thing I want to mention is
Sure.
everybody needs to have a max amount of losses
Like what can you
per
take?
day.
Like personally.
What can take? No. It's because of psychology. Um, I got taught by my mentor that if you lose more than 3 times in a row, even 2 times in a row,
Oh, suspension.
or 3 times, you have to stop
Yeah.
because one, you're not reading the market. 2, your psychology's off, and 3, you're gonna overtrade or you're gonna FOMO.
Same here.
So if you get 3 straight losses, you need to. Honestly, for me, it's 2 straight losses. I put my computer down and I go do something for an hour and I'll come back. And if you get 3 straight losses, you need to cut it. You're
Yeah.
done.
Concepts based around the best loser or the best loser wins, I think.
Yeah.
And honestly, it's true. It really is true. So, yeah, man. After the one loss today, I completely just put it down. Right. So it was
Let me see,
we had
Aiden.
3 wins yesterday. We had 2 wins the day prior to that. The average was, it's just yeah, dude. It messes with your psychology. Even the one loss, even facing one of them, it's just like and then you're like, you know what, I can reposition, I can do this. So psychologically speaking, you're already kind of impaired, So I felt that not only was my son kind of in my mind, right? He's awake, I got to make sure to hurry up. So I can't say that necessarily, right? Because the financial markets don't care. They don't care that my son's awake. They don't care whatever situation we have. So this goes along to what you're saying, because it really doesn't matter how far back it'll pull or how much upside it'll have before some type of a break. It's just that if you have your risk parameters set for a fixed amount and a consistent amount, then that'll be your risk management parameter forever, because that'll allow you to maintain a consistent amount of losses at a certain max amount, and then you keep your gainers bigger.
Yeah, I'm
Because
looking
you'll
at
have
Aiden's question.
yeah,
When
let's
you mean
read it
dollar
out
amount,
loud.
do you
What do you
mean
say?
by the whole trade? So, like, say my maximum risk is at $30. Does that mean that I get out of the position at $30 no matter what the percentage is? No, Aiden. You want to your $30 max risk. You want to when you put in your trade, when you put in your options, you calculate for that. Say you take one option for 30 cents, right? Well, $30. Okay. You know that one has 100% risk, so you could lose it all. But now you double it. Okay. Now you get 2 options. So now you got a 50% pullback. You go 3. Now you got a 25% pullback, and that's how you calculate it.
Did you get
So
that, Aiden?
if you get a dollar option, $30, you got to calculate how much you can pull back, and that determines how many options you buy.
Do you know what it means? It's just yeah. Okay, good.
Yeah. Just remember, there's a max loss, which means everything went to hell, but there's the technical one, which should be enough to survive any pullback. But with options, at 25% is probably good. It's probably a lot,
Yeah.
But survive any pullback. I would go, you could go 15%.
And what's crazy is that oftentimes it'll pull back like 20%.
Yeah. Well, then what you do if you see the market, it's pulling back. You buy one option and you wait for the pullback,
Get
and you
scale
buy
in.
another option.
Yeah.
Yeah. Now, let's say you buy one option, it takes off. Who gives a shit? You make money. It
So I
doesn't
have a
matter.
good
There's no.
example. I have a good example for what you just said. And that's based on what I shared with the team here with you. Based on that very concept, right? Of having a scale in process. And if you like, you can scale out, or you can just push the one button release, right? But this is what Cryptic sort of means is presented. Oh my goodness, are you kidding? Let me just go ahead and bring that up one more time and zoom in on this. I'm going to switch over the screen here so people can see the FOMC day, right? Yeah, just like Options is saying, it was a massive winner. We yeah, I think Cryptic had faced one of his biggest trades that day too, or for the at least for the month, right? So take a look at this screen here. I'm just going to go ahead and switch over, and these are my trades for that day. This was the day before yesterday, right? So just to kind of give you some transparency here over how the plays happened. So I have an initial 5, right? Now I tend to do that often. I tend to enter with 5, and then I scale in some more. But when I don't feel the absolute conviction in the play, then I'll do 1, right? And then I'll scale in little by little, and I'll feel the risk, right? It's just that the thing here is that, unfortunately, day trading and momentum and scalp trading is completely based on a feel. It's discretionary. Your ability to read price action it should be of great precedence here, right? So
The one
yeah,
thing I want to say about this is this is not averaging down. Okay. Like when like all those YouTubers would say average down, this is not averaging down.
yeah,
What you're
no,
doing is you're increasing the range you can trade. That's all.
exactly.
So by doing this, you're making your stop loss longer, and you could take a bigger pullback and still make money.
What they
That's all
call
it
what
is.
they call by widening your stop,
Hmm.
right? So you widen
Yeah.
your stop based on your risk, and then your win. These were pretty consistent wins, except for the Tesla play. The Tesla play, that was just, I mean, it was a multiple point move to the downside, right? And we bet against the market there. So, but the other ones were more consistent, right? So we had this huge push on the Tesla play, depending on it, and that's how I did. I scaled in based on the volatility. I didn't really go in as hard as I could, because that volatility can also reverse on you immediately. Based on a technical pullback or a technical target, historical support or previous resistance, gaps of any sorts from back who knows when. Tesla's been trading a while, so we try our best to observe price action and observe the historical pivot points or pivotal points or inflection points, and try to put it down into the thesis. But a lot of these times, these opportunities happen quite quickly. Sure, me and Cryptic and Sebastian will look at the play the night before and put together a thesis and put together some targets, and it'll work out. I would say that our hit. What do you think, Cryptic? Our strike rate. I think it's sitting 75 to 85% easy, right? Or maybe
I
even
have
more.
let's see, I use chart log
Sorry,
to
say again.
I use chart log to chart my every trade I have. Let me see.
Online. That's the
Uh,
online platform.
yeah, it's a journal, online journal.
That's
I'll tell you
cool.
right now. This week our strike rate has been on the please let's see. Boom, dashboard. 1 second. Strategies,
Oh, I bet Options. I know you have,
price,
brother.
tags, options. This week our strike rate is 72.7%.
See, that's what I mean. I was just telling him that our strike rate should be anywhere between the 75-ish, 85-ish%. And that's the metric really doesn't matter, as in, like, I'm not trying to flex on the win. I'm trying to flex on the consistency. So if we're winning 72% of the time, then
Our buddies is 10%. Just
oh,
so you know.
dude, no way. Wow. That at some point you would figure just to maybe inverse your play and just trade the opposite of whatever you thought of. If it's really 10%, oh my God. There's consistency in one direction, right? So, right, what I was saying here to Cryptic is that it's not the percentage of the win rate. It's actually how you're able to manage your loss during the 28% offset. So
You know, you could be a 50%. You could be a 50%. You have 50% strike rate and still make bank
yeah, yeah,
if you're
even
because
40,
your
even 30.
loss. Yeah, yeah. It could be really low as long as your losses stay limited and you let your runners run. That's all you need to do.
Yep, yep.
Now, in my case, I have a small on both sides, which is why like options can make 160K in a day. And my best day, honestly, I think my best day has been 30,000.
30?
That's like, yeah, 30.
Stupid
But
high.
but I average like 5.8 thousand a day, which is not much for big account. But I'm safe. I do this for a living, so
It's
I'm just
conservative.
staying consistent,
Yeah, dude,
conservative.
I would agree. I
And,
would
and
completely agree with you.
I'm gonna stay like that until my account hits 1 million. Once I get 1 million, then I'll go out. But I'm not there yet. So
Yeah, I think the path to seven figures would be to maintain consistency and make sure that you can
mhm.
just keep it green as long as you can. I agree. I completely agree, brother. Now, options is
Yeah,
saying,
options is right. That
yep,
Mark Douglas is
yeah,
what I live by. Everybody that asks me to mentor them, that's the first thing I tell them. Read Mark
dude,
Douglas.
Mark Douglas, yep, dude, I completely agree. And you know
You know,
what?
one of the
This,
mentalities that these YouTubers have instilled is that the casino mentality, that the market's the casino, and I hear them say it. Mark Douglas teaches that market's not the casino, we're the casino, because like we have a 70% strike rate. So as long as we trade the same, our stop loss is the same, our take profit's the same, we're gonna win no matter what. We might lose 10 straight trades, but we're gonna win 20 because the percentages equal out. And that's what casino does. They lose, they lose, they lose until, but in the end, they win. So
dude,
that's the
yeah,
mentality people got to change. We're not the casino. I mean, we're not playing against the casino. We are the casino if you have an edge.
dude, I completely agree. And if you guys are not familiar with what options is saying and what and it's actually up on my on my Discord. I think it may be up on my Amazon storefront. So it's actually he's known for the widely known, super popular book Trading in the Zone. Right. So Mark Douglas is absolutely one person that has put a staple into I would say more short term trading, right? Not so much into swing trading or investment strategies. I think it's
No,
more for day trades.
no. He's a day trader. You know, my
Yeah.
mentor was trained by Mark Douglas before he
No
died.
way. So cool. Wow.
But that's why we preach it, because he preaches it. You know.
And then he trained Andrew Aziz, which is Bear
Yep.
Bull Traders, and you and I actually met because of Bear Bull Traders. We were both
Yep.
fans of it, and
Yep. And see,
and
the difference between my mentor and Andrew is my mentor is also a millionaire, like, well, he's a multimillionaire like Andrew. But my mentor doesn't take those $1 million risks like Andrew does.
yeah, that guy really
He,
lives
tra-
by
he, tra-
that,
he
man.
yeah, he
Dude.
loves the wild thing. That's why they ended up breaking that off as a relationship, because Andrew doesn't give a shit. He'll put $10 million in the trade.
Yeah, even Lance, you know how much I look up to Lance Brightstein, right? So even he's an eight-figure trader, and I don't think his positions are beyond uh, deep five figures. I think he's close to I think he's close to entries at six figure. So I think it's based on that. I think that it took him a strategy similar to yours and a discipline similar to yours, right? In order to make that five figure count into a six figure, then turning into seven, and then seven into eight. So I mean
Yeah.
that's high stake. So at some point, man, keep it. You might as well just throw money out the window.
But but Aziz at this point is not a trader.
Yeah,
Aziz
he's
just lives
more of
off of
yeah.
other stuff.
I think he's not hungry like he was before,
Mhm.
right?
He
So
has he has his he has his firm. They trade for him. He's out doing other shit, banging chicks and climbing mountains. So,
Partying
uh,
it up.
don't
Yeah.
care. Yep.
Yeah, man. So options is dude, options. I love you, man. Thank you so much. So options said uh that let's see, combine that with so combine Mark Douglas with ARCa's TA and you're golden. So he's saying you
So
will sorry, brother.
that's why we click. That's what I do. That's why we click.
Oh,
Like for
because your
example, the
strategy
meta trade.
alongside. Yeah.
Yeah, I have my own strategy that's kind of not like yours, but it is. We don't trade the same, but we come up with similar PTs. We come up with similar entries.
Yeah, yeah, and
Like
we know, dude. Like for example, when I was talking to you about the take profit on the meta short, right? We were talking about I think it was 228.25. I think it may have been Tesla actually. So I was telling you 228.25, and you came out with a target of 228.26. So I mean, dude, if you're not noticing the consistency there, then I don't know what the heck is going on. But yeah, options. So aside from you, Cryptic, there's been two other traders that I've noticed that have that kind of edge, and options is one of them, right? So, but it's just I can't grab a hold of that guy, right? He's doing his own life and stuff, dude. Other than that, other than him, I think it may be even Joe H, bro. Like he's a mathematical mind, so he plays with the numbers. But besides that, dude, actually, is I would say that options would be options and off grid gorilla. Those two are actually traders. They're actually traders, and it's hard to find, dude. It's so hard to find. I'm so happy that I found you, dude, or you found me, or however it works, because it's so hard to find someone else that really takes it this seriously and knows that if you lose, dude, like that this is your ass,
it's funny. Aiden asked, "Does Cryptic take linear regression?" And I'm like, "Dude, I'm the one that showed it to ARCa. See,
dude,
that's how ARCa incorporated something from me.
dude, one
That's
hundred
that's why we
percent.
click."
Aiden, so he displayed to me this. I'm going to bring it up to you, right? Because this is actually a TD Ameritrade indicator that has, and we're still kind of working on it. And we're going to further develop it, right? So let me show you here on the other screen. Let's flip it over. And here we go. So the linear regression channel appears like this, right here on pane. And I noticed in his TD that it had several
Can't see anything.
other. Yeah, you know what? I
Can't
think.
see nothing.
Oh no,
No.
guys, can you?
There it is.
It's not in the Discord. It would be in the YouTube screen.
Yeah, I'm looking at the YouTube screen. I
Guys,
can't see.
can you see the image, or is it just?
Oh, okay. Yeah, we see your screen view now.
Oh, no. Okay, good. So, okay, awesome. So this was the original thing that TradingView has as a script, right? And Cryptic came up to me and said one day, dude, you know what? Smart money institution strategies, they use a linear regression channel. And I'm like, linear and regression. I'm like, dude, that's everything that I do in statistics. It's all range bound, meaning that, for example, a Bollinger Bands is usually calculated with a mean, and a 2 standard deviation multiplier from that mean would be your top side, and a 2 standard deviation multiplier negatively would be your bottom side. Of course, you can set it to 3 or 4 depending on whatever your strategy is, but standard it's 2. So it was similar to it, except that your linear regression was finding a mean, and it was also finding the top side and the bottom side based on trend. So it automatically shifted the channel to whatever way price action was more than likely led to, or more than likely whatever the trend was going to do, is the linear regression would follow that. And I found that to be so interesting. And the pocket that he also showed, it wasn't just the indicator that he displayed, it was also the time frame. So I know that I use it in several time frames too. But I think that Cryptic is right. By using this in the hourly time frame, it's a pocket and it's a niche time frame that it really latches into as a sweet spot. Now,
That's what institutional traders use, the 1 hour, and I learned that from my mentor.
so awesome.
Right now they use 1 hour. I mean, they might change in the future, but right now the 1 hour is what they use.
Yeah, and you know what? The narrative always changes at some point, and we'll catch up. We'll catch it, and we're noticing right now that there are certain upgrades that we can do to it. So what I mean by upgrades is that he displayed to me this indicator, right? So I don't have the platform in TD Ameritrade, so I can't see his actual thing other than with images and stuff, right? So what I ended up doing was I modified the script and I put it down. Now it's called the ARCa LRC, right? So ARCa LRC is pretty much the same thing except with the added mid bands. Now, Cryptic and I were noticing some anomalies today in behavioral anomalies regarding price action near certain pivotal points. So we're also noticing that we could probably extend or something, right? So we're still in the process of really honing in on this script. So Cryptic Trader came up to me, showed me this strategy. I'm like, dude, this strategy is a moneymaker, and I tried to apply whatever I could to further the strategy. So I tried to further it by applying my coding skills into this and making this out of it. Now, mind you, that there's also ideas too to create certain types of indicators as well, of which we can do. So where he has his complete discretion, I have a complete mathematical side to or algorithmic side to it, right? So, for example, a fundamental trader would be a great trader if he also knew his technicals. But oftentimes, you don't have a fundamental trader who knows his technicals, right? So in this case, a discretionary trader having also high frequency or algorithmic trader or more math-based trader, quant, right? That can actually add edge to both parties equally. So, and this is why we ended up kind of matching and said, you know what, dude, I think if we met, we said to each other, if we merge some of these strategies, there could be a serious edge here and something that we can display to retail and really provide like an actual a strategy for playing. And we're still working it, guys. We're still kind of shaping it and morphing it, right? And this is going to be one of those tools to determine risk management within it too. This guys is super powerful. But yeah,
retail options.
Yeah, man, no, dude. But Cryptic was the reason why I even used it in the first place, because which is crazy too, because even before this, the targets that I would come up, he would often say, "Oh, that's the linear regression bottom," and I'm like, "What the heck is that?" So it just shows how awesome the tool has already been. And
I will say TDs is still more accurate than this one, so we still need to refine it.
What the heck is it? So you know what, dude?
I don't know why.
I'm gonna look at the the script in TD. I want to know how it's built, and maybe then we can apply the script here, because I did notice that there was a certain difference upon the closing basis of a certain candle against the mid bands, and that I hated to see that. Although sure, it plays well, but not.
The meta trade that I showed you, I don't know if you understood what I was trying to show you. There was indecision where the candles were crossing the middle of the bands, and it's not in that one. But once it held over, there was a push up. That's all I was trying to show you, that this band right now doesn't have, and TDs does.
Oh, okay. You know what? We're gonna And do you know how if there is? You know how mechanics have their like I think it's called their dealer. No. Yeah, I think it's called the dealer manual or the customer manual. One is really detailed, and the other one, Louis Vuitton says options, or they have their standard manual, like for a customer. So I wanted to know if TD also has that. Like they have their nerd specifications versus the just typical specifications for the indicator. I'm gonna research it, brother. I want to see if we can tighten it, because there's no way we can't get that to be that tight. They have to have a certain parameter that we're missing here, and we have the freedom, the utter freedom to do this. Look at this, you guys. So clicking on this, let me go ahead and pull it one more time. Where is it? Here we go. LRC, right here we go. All right, so this is the ARCa LRC, and this is where the magic happens, right? So this is what I manipulated or changed based on what he showed me on TD. So I'm thinking that there could be some type of parameter that I'm missing that I can, to get the targets to be tighter. And it really means the difference between a max loss and a complete win if we don't have it that tight. And so far we're performing pretty good with it, 72%. Watch us go to 78% if we start tightening this.
You wouldn't have entered the MetaTrader had you seen what I saw.
Damn,
remember, I was kind of like not paying attention, so I didn't tell you. I was all doing my own trades.
Mm-hmm.
But when I was asleep and you pinged me the second time.
Oh, that's what happened.
That one, I'm like, oh shoot, yeah. Remember I told you, let me look real quick. I'm like, oh damn, I'm gonna go in.
Yeah, because it was gonna fall off a cliff there.
And it was gonna fall off, and it was gonna fall off my linear band. See, yours didn't show it, but
mine didn't. So I had to use a traditional formation. I had to use a rising wedge, and the rising wedge displayed to me the take profit too.
Yeah.
So options is saying, "Come on, ARCa, stop being so humble all the time, dude." I don't know if that's because dude, trust me when I say that I'm not like that with Cryptic and with Zephram and Sebastian in private. Like I own my shit. Like I know just like Cryptic, dude. He's also being nice right now. But yeah, man. No. Like when it's not in absolute public, we will say things that should not be said out loud. And it's because, dude, it really is because of that. Like I would explain to them, like I don't know if I actually said this to you guys, but it's when you go to like a bar or a party or something and someone knows that you do that, you're that guy. You're absolutely that guy, and everybody looks at you like intimidated, right? Because you're a stock trader. And then more so, then they'll probably find out that you're a stock trader with thousands of followers and there's influence behind it. It becomes yet again a deeper level. And I still get those memes saying ARCa Bulls like swimming in all this money, and I'm like, no, and the guys even make fun of me. They're saying, how the hell is our leader of like a 4-figure trader? Right? So it's just
ARCa makes $20 a trade, man.
It's all like just to mess around because it's such a good like.
Even Aiden has more.
Dude, even Aiden is just playing way harder, right? Dude. And I think it's part of the good times, man.
Maybe you're Lauren's dad. You have the big account.
Dude, that's the problem, bro. No, I'm probably what's happening here. Yeah, maybe that is the case, right? Don't release my secrets. No, man, the thing is that in reality, I did, like, for real, 100%. I over the span of around 5 to 6, maybe 7 months, I turned $80 into $50,000. But dude, that I can't keep because I needed to save my house, right? I needed to save my cars because my energy bill was going through the freaking roof, man, and all of that COVID relief was just way gone. Right, so at some point we were getting knocked on over here, man, saying, "Hey, yo, you got to put your thing down. You got to, are we gonna have to kick you out or what?" So, that all of that stuff just had to be siphoned from the portfolio and dipped right back into the house. So my trading is literally survival, right? So at some point it's gonna start kind of deviating from that survival mode and then really for growth. And I can't wait for that moment, and I can taste it already, especially introducing the direct access terminal, bro. Coming back into it, which, by the way, I have a picture for you, man. My original DAS setup 2 years ago. I don't remember anything of it. I just remember using it. It's insane. But yeah, man, thank you for it. And guys, you have no idea how much Cryptic has helped me. Also Sebastian, Zephram. Zephram, for example, the system, that massive computer system, he helped me build it, right? Cryptic over here, bringing in massive strategies and also putting together the whole desktop for DAS Trader for me to trade on. Guys, like finding support like that is stupid. It's hard, right? But yeah, it's good times, man, and it's for the future because we're just gonna be big and bigger and bigger, But I hope you were able to understand some of what Cryptic was talking about regarding and I think bro, thank you so much for sharing that, because honestly, it would be the smaller accounts that trade options more often than not, and that's because in search of the growth of the account, right? So, and honestly, dude, that's how the last few, I don't know, man, the last 7 or 8 trades have taken my account into great highs, and then of course, Christmas is coming, so I got to remove risk. Yeah. But like I said, man, it's gonna get easier, it's gonna get better. But having the support like someone like Cryptic is just massive. Mark Roach, my brother, good to see you here. Cryptic was throwing cash in front of a fan at the strip club last night. He flexes. Seen him drive away in a new X5M. Bro, are you driving the brand new BMW X5M? What's going on with you, man? Is there a competition package on that too?
Mark, a year old.
It's a year old. Dude. But yeah, you guys, I very thankful for this, right? So now remember that he was just talking about primarily an options risk, because this is primarily what I'm trading right now, just so I can get this account moving. I can't like necessarily go. Yes, I have margin on my account, but margin on a $1,000 account is margin of a $1,000 ratio. So
you don't want to go to margin and options.
Yeah, no, definitely no.
Anyways.
Do those cash, right? But yeah. What I meant is for
Stocks,
shares.
yeah, but not in options. Yeah.
What I meant is like for shares to trade, right? So my margin is literally the same amount I deposit in there. So I can't really afford more. It's like, well, I mean, to be fair, for example, it would be like $1,000 you would put in there. They'll give you margin for 2,600 or 2,800 or something like that, right? So in my case, it's even still, it's not enough, to really trade these high output, high volatility plays. Oh, options. I got to tell you this, dude. So, you've been watching me trade the 0 DTEs on SPY, and that's because I like the movement, the volatility, because it presents a great opportunity for a shorter length, and calling a shorter length support to resistance or resistance to support inversely, it's stupid easy, right? So, but what I have to tell you is this, man. Cryptic was like, dude, Tesla. Sebastian was like, Tesla, right? I'm like, damn it. Okay, whatever. So we went on Tesla on Fed Day, right, on Wednesday. And I'm like, damn, it's all December 15th expiry, 2 days out, right? So I'm like, screw it, man. I'm going to go. And the only ones that I could afford were around four staples beyond the at the money. Right. So I was like 4 in out of the money. And I chose that. And dude, I will tell you right now, the volatility on a 2-day expiry, Tesla put or call for freaking like $2 or $3 out of the money is probably 5% more volatile than 0 DTE SPY. Bro, dude, I never knew that Tesla was able to give that kind of output, dude. And now I'm all like, what's next? And I'm like looking at Meta. I'm looking at Netflix. I want to know those, dude. Yes, options.
Dude, I told you, bro.
Yeah. It was Cryptic. It was saying, dude, you don't even know what these big boy plays can output. And I'm like, really? And I never really knew, because
just look at the ATR, bro. The ATR tells you.
Yeah, and Meta has a huge
move $8 a day, bro.
$8 a day, bro. Oh my God! It was like a brand new drug, straight up. I will never turn back. I can't do it, So, and I keep on wanting to, deliver this, and we both are. We're actively trying to get people out of these small caps, man. There's no way they move this fast. Small caps and micro caps, there's no way they move this liquid.
Nope.
Like, it's just, we're talking about the transfer of massive money.
Oh, and in micros, once you're trapped, you're screwed. In these, you can just flip it. It'll come back to you, It always comes back to you.
It totally does, man. And it's a safer play at that. It's like, dude, it really, the asset class of people is completely different. You have a less educated trader in microcaps, And you have a more educated trader in the blue chips and large, even in the mid caps, to be honest.
Yeah, but mid caps, they don't, unless you find a really good possibility of a huge run, I'd still stick with the big
Yeah,
boys.
catalyst based, like only if we knew,
Yep.
like Pfizer.
Earnings or something like that, or
Yeah.
something big's coming.
Which, by the way, that's something that Cryptic is actually having me do because I don't think he'd ever seen me scalp, but I'm pretty good at scalping short ranges, and that's I was never. It took me a long time to really do that, and it was actually a lot of training in crypto. So that I think that's the next merger of strategy that we're about to do together. It's going to be the earnings plays. So, and if we introduce earnings plays, then I'm going to further the challenge to do IPO. And let's just see how we can take that, right? But I don't know. IPOs, they got to be in season. That's so risky.
Yeah. Earnings are great. You just got to know how to play them.
I'm so nervous.
The one thing with earnings is you cannot guess.
Yeah, no.
Like people will guess. Like I see our buddies say, we're gonna put 10 calls on Meta for earnings. Well, Meta's gonna go up $20, but it's gonna come down 40. And you can't sell them. So you got to be more careful.
Yeah, that you can't guess that, dude. Oh my goodness, man! I know the crap out of that. Yeah, it's just, and it almost feels like you're just trying to say something to say something. Like, no, man.
There are ways to play options with earnings. I have them. Bearable traders showed me how, but I don't do it. It's honestly safer to just, even if you could play 20 stock, just get 20 stocks. The thing's gonna move $10.
So Mark, earnings plays, not to guess, not to guess. So the thing here,
you don't guess.
Yeah, never. The thing here is to wait for the reaction. So you wait for the reaction, and then you wait for the guide, right? So whatever the guide is, whatever the support is, whatever the direction is, you react upon that. So you can counter trend that, or you can play the move, right? So, but with confirmation, right?
With options, you're gonna see that the institutions, the big boys, they will put their calls or puts based on the expected move, but you could see where they load up. Now they'll hedge. So say like for example, today Costco reported.
We're in earnings. That's right.
Costco reported, and you could see the swing. The first swing was from 635 to 620. Now the expected move for that was, I think, 640.
640.
Oh, yeah. So what happened is once you hit your 620, which is your opening, this is where people get screwed. They guess wrong, or they guess. Now what happened was they recovered. They went back red to green at 630. Now that tells me to get in. And I could play from 630 to 640. I could play a $10 swing.
It's a psychological bottom.
Mm-hmm.
You know what?
And that's how earnings happen. The first candle will be disgustingly volatile. So it could go up $30, go down $30, go down $50. But then it'll always settle down to the expected move,
or it's fair value,
or fair value.
So today was a great example over something like that. I'm not sure what the hell moved it. I don't know what moved it, but Roku, dude, that thing mooned. It mooned at open range. Look at this, dude. This thing opened at 103.97 and rallied to 108.84. Oh man. I was trying to chart this, but I couldn't because the overextension was real, bro. That's mad FOMO. Like I couldn't. And I'm like, you know what? I told my brother, I was like, this is such a ridiculous mover. I don't even know where it's gonna stop. Look at this thing. We're talking about bi-weekly. Where'd it go to? 108.84. This is 108.40. Like this thing just did not stop. Right? So
you see the trade I posted on on Discord, EMPH.
Oh yeah, I remember it from earlier today.
Yeah, I caught it from 114 to 123.
Damn, 9 point move. Oh, dude. And you know what? I think sometimes when just the volume is massively surpassing its moving average, that's generally positive RVol, right? Relative volume, and that's just
Yeah.
an entry. Like, let's go.
Mhm.
Eh,
The thing with these though is you really need direct access to play.
yes, yes.
You cannot play these on Weibo or something because you'll get smoked.
Yeah, no, definitely not. So, guys, here's a quick tip, right? Don't take today's price action into consideration. But actually, if you could, then take the prior day's low and prior day's high, right? So that's your current range, right? So aside from that, keep an eye if you want to look at your daily, pull up a 14-day average true range to see what that asset can move. So from the open of the candle up or down, that average true range would be your resistance and support levels too, psychologically, right? So pair
You
that.
also you
Yeah,
also
go
got to
ahead,
look
brother.
at your let's look at your moving averages on the 1 day.
Yeah.
I'll make sure there's nothing blocking the move. And then you just play the volatility.
So daily time frame preferred moving averages, I would say your SMA 10 and 20, SMA 50, 100 and
No,
200.
5, 10, 20, 50, 100, 200.
There you go. So now if you are a holder of the ARC averages, you should have received an email, and that now displays to you stock, right? So you have your SMA 5, SMA 10, 20, 50, 100, and 200 just executed right off the bat. Right. So, and then also, you can go into the script and completely manipulate whatever you want. So if you want the exponentials for immediate short term trades, the stock ones that I have in there are the EMA 7, 9, 20, 30, and 50. But I would honestly start adding the EMA 5. Right. You can add your EMA 9 into there. Add your EMA 200 for the 5 minute. And yeah, and everything. I think everything you can set up as your particular whatever you want. It doesn't have to be arc averages. It can be anything.
On the 5 minute, nothing works better as a trailing than the 9.
The EMA
The
9.
9 is that's the best trailing. That'll tell you. It follows. Most of these follow it and bounce off it to a T.
And yeah, I have been noticing that too, brother. It does have a clean guide.
I think Aiden asked why the 7 and the 9. I prefer the 9 because if you look at any chart, it'll bounce off the 9.
Oh, and Mark Roach giving us some Roku news. So Roku's November 1 financial update illuminates its growing strength in the market. It's in the third quarter of 2023, the company reported a notable 20% year-over-year increase in total net revenue, reaching $912 million. Wow. So content distribution, video advertising, and newly launched Roku branded TV sales powered the surge in revenue during this period. So I want to remind you too that there was an upgrade from I think $112 to $120 6 days ago. So Roku has been on this bull freaking run. But yeah, going back to the moving averages, you guys, if you want to manage your risk a little better, consider having.
Look at today's Tesla on the 5.
Let's see. So today's Tesla, let me put the exponentials in there. Display EMA. Let me get rid of I'll get rid of the SMAs, and then I'm gonna add an EMA. Oh well, I can just look at the EMA 9 for now, and just see how it reacts right against the 9. So this is the 9 exponential moving average, right? So let's go down here at the open, and a clean open, right? This is what Cryptic is talking about, right? So you have this candle open right up here at around 240.70, immediate drop right down to the support of the EMA 9, and then it just continues on to the upside. Supports one more time and breaks below support, right?
And they ride the 9. See,
Yeah,
you can ride the 9. That's how you know it's not over. If you're riding the 9.
and also the pivot of the 9, it's like not really not really
Mhm.
capitulating. It's still kind of, it's just
Right.
consolidation, right? It's a temporary.
And remember today I told you, what was it, the one I told you to get out if it crosses the 20? Because the 20 usually indicates if it crosses the 20, usually it's going to bounce down to the 50.
Oh yeah,
And at
meta,
that point, yeah, at that point your trade's over. It's reversed.
insane. So Tesla showing some weakness at the market close, post market,
Yeah.
and there's also a triple moving average crossover there. Wow.
So Tesla right
Take care,
now,
Mark.
just if I'm taking a look at it just quickly, we'll see what happens pre-market. But your indication of going into it is break up pre-market, and then you have down to 246, the 200. So let's say it goes down to 249, and it'll bounce up to 250. Then if it's weak, it's going to break below the 249, and then it's going to put a 200 and bounce up.
Agreed. And I think this is actually setting up a pretty nice bull pennant, considering the after hours trading too, right? So if this in fact is a bull pennant, then yeah, there could be immediate short-term time frame downside to around two. I'm looking at the linear regression band on a 5. I'm not really partial to that, but I'm looking more at the support levels down here at around 249.40. It could even see, but the thing is that I would be comparing this to the previous lows, right? So there is a flash wick down here to 249.41. So if we do get a 248, you think?
That's why I'm assuming that if it breaks it, then you're gonna, but your 200 still gonna resist, and it's gonna bounce up.
Yeah.
So that after that, you're gonna see if it's bullish or bearish.
Let me add that into there, right? So we're gonna display a custom,
which will kind of match. Watch it'll kind of match what you're doing there.
Okay, let me add
at least close.
Oh yeah, at least closer to it. Oh man, the EMA 200 is completely in line with the EMA 9 right now. It drops. The 200 was kind of making its way little by little, and now it's meeting. We broke below that EMA 200 on the 5. This is for sure coming down. If it's going to come up, and it's already breaking this short-term inflection too of 250.31.
Throw in the SMA 200 also.
Let me see the SMA 200 and see how that channel looks like, right? It should be slightly below too. Oh, you know what? We can display it right here. And let's see where the hell that thing is. Hold on, what the hell? There it is. Dang. Oh, no, sorry. This is the EMA 200 and the SMA 200. Sorry, this up here is actually the EMA 21. This one here.
Yeah, it's got to be below because I have it below.
So actually, you know what? This is inflection. This is a total inflection here. So breaking any candle beneath 246.17 is capitulation. But will it actually though? On a bull pennant, it could be a bull trap actually. Dude, this is I don't know. What are you feeling personally?
I think right now I'm not feeling anything. I need to see what happens in pre-market.
Look at this hourly time frame breaking beneath the SMA 14 on the RSI. We definitely have stochastic momentum towards the downside, and we have contraction. The SMA 50 on the hourly is located at 249.50 or 44. Let me look at my bottom line is really the 4 hour, dude. So, the 4 hour is pivoting towards the downside. Damn, could it be? We may fail.
That's why I'm saying, just like what I'm seeing right here, just offhand, it looks like it's gonna drop.
Yeah, it feels like it. It feels like it's gonna.
But I won't go into it until it breaks a pre-market, and then it passes the 200. That's when I'm heavy.
Yeah. So you're talking about 5 minute or which time frame?
5 minute.
5 minute SMA 200 versus the EMA 200 located right at about 246.72, 246.90, likely to change by the time markets open.
Yeah.
Puts on Tesla till next year. Let's go. Tesla is up 929% in 5 years. Options just said, holy crap.
Yeah, it might be a pullback.
Yeah, I think. Why am I feeling that, bro? I really do think that this could really pull back. That's
Yeah,
not
I know it's a bear flag. I know it's a bear flag, but my eyes tell me pull back.
no, but
Without,
this is
without,
not validated. This formation is not validated. We do not have two touches of the support, so this is wrong. Something, yeah. So it's due for this is a formation being forced. This is
Mhm.
invalid. I don't trust it, and I think the downside here would be to the EMA 200 and the SMA 200. They're both in line and at the
and,
invalidation
and
zone,
and that will tell you what your big trade is. If it breaks it, it's gonna come
dude.
down.
That's gonna be a
If it
2, 3, 4, 5,
if
6.
it bounces, you're gonna get to the high.
Initial move to the downside, breaking invalidation would be already a one and probably a 2 point move. Now breaking beneath these here at 244.97, yeah, that would complete maybe a 4 to 5 point move.
Well, option says he's shorting it, so
You're opening short on this. I mean, I wouldn't even doubt it, dude. First inflection would actually be to close a 5 minute candle beneath for the 249 ish, beneath there. And you know what? I think let me see the hourly
you
Lin
also
red.
gotta remember Microsoft is still looks hella weak.
Oh, that one too was falling like crazy. And AMD was falling like crazy too, dude. That one was capitulating. Like, look at this, dude. 141 to 135. Damn. That was a good move. That was a fair move. So Microsoft, AMD, Nvidia had a pretty nice move to the downside at 486 to 474. It's fair. $8 move to the downside. Awesome. That's this shock here is the reason why I'm bearish the markets. There's no way we're gonna just recover from that. This is a panic bounce because of psychology. But guys, tomorrow is quad witching, or they now call it triple witching, whatever. So all major options contracts are expiry tomorrow. Now I don't know. I guess we're gonna have to find out the ratio puts against calls or whatever. But then even that doesn't tell you the honest truth, because the thing here is that is gonna give you the put to call ratio, but you don't know who's shorting the call, and you don't know who's shorting the put. So it's giving you the traded call and the traded put, but without the details of who's shorting or longing the call or put. So it's kind of wrong. And in my favor, if I were the market maker, I would squeeze the longs, because we're completely frothy, liquid. It's completely liquid to the upside because of the Fed. What do you think? I don't know. I feel like I'm bearish. I feel like I'm bearish to markets. They pumped it. We have liquidity on the table, and this triple witching tomorrow or today, whatever, that could push things to the downside in a massive manner. And again, people are going to start liquidating position because they don't even want to trade the triple witching. But it's a high risk day. We have some economic data in the morning too. It's not really a market mover, but it's going to be a volatile first 15 minutes of the at the open. So I would say watch out with that team. And we covered today some options based risk management. We should probably tune back another day and cover the risk management for stocks, and work on the average true range, previous day high, previous day low, pre-market highs, pre-market lows, whatever the participant would like to latch on to based on risk tolerance.
Yeah, this is what I use. I use pre-market high, pre-market low, previous day high, previous day low.
Yeah, those four are generally used, like all the time. They're great rules of thumb.
And red to green.
Red to green, yep. So, guys, I think this is a pretty good place to leave off. Really appreciate everybody for coming on by. So Mark Roach saying the average rate on the 30-year mortgage dropped 6.95% from 7.03% the week before, according to Freddie Mac on Thursday. Wait a second. It dropped to 6.95 from a 7.03. How is that happening? How are they doing that without the Fed actually pivoting? Are they doing that thing again? Are they doing the whole the swaps, the credit defaults, the CDOs? Is that what they're doing again in a different way? How are they able to bring that rate down that much? That's incredible. We'll be cutting next year for sure. I bet. So, guys, remember a rule of thumb here too. Your inverse things to observe, right? So, strong equities, weak dollar, right? So you're gonna have the DXY falling while the equities rise. Oil will fall too, so you're gonna have your WTI futures contracts come down. You're also gonna look at your bonds fall, right? So keep an eye on that, right? So the weaker the number on your 10-year note or your 10-year yield, the better, right? So we want to get that to a 2%, and then we'll be rallying, right? But yeah, as it falls, as those things fall, right? So your oil, your dollar index, bonds, all that stuff, as it falls, the stronger the equities move. All right, so please be very careful with the way you observe the markets. There are so many things. Little buddy is not Joe H, dude. You have no idea. Options, dude. Joe H is miles beyond that guy. Right, Cryptic?
Nope. A little buddy ain't Joe H. Joe H is a prick. He ain't little buddy.
Joe H is an asshole, but not little buddy.
Little buddy loses all the time.
Dude, apparently 10%. 10% is the hit rate for, what did you say, this week? That sucks. Yeah. So yeah, guys, we can't be little buddy. All right, you guys.
Little buddy.
Yeah, man. But yeah, guys. So thank you, Mark Roach, for coming out. Options, love you, buddy. Aiden Davis, get some sleep, man. Let's see if we can meet up in the morning. Lil Buddha, you need to get out of those plays immediately, right? You're gonna get your butt handed to you, man. You can't trade that.
Little Buddha sell.
Little Buddha sell now. Get away. Oh goodness, dude. I'm talking about strength in the markets and still downside. Why? What? That's ridiculous. What does that? Well, I'll tell you what, GME and AMC. Man, nothing happening there, guys. No, it's not the ghetto there.
Little Buddha's still an ape.
Dude, do not be an ape. Do not ever diamond hand nothing again. I mean, unless you're trying to invest in index funds and stuff, you know what I mean? If you're gonna dip in a bunch of money on the S&P 500 right now, you know, if you have that kind of money, sure, put it in there, man. Hold it for 10 years, see where it's at. But dude, AMC and GMEs, those are really touchy subjects here, man. Both of us. Stupid plays, man. Just lost.
Little Buddha seems like he could go trade with Little Buddy.
Little Buddy, do not. Damn. Is it Little Buddy? Is it low key?
Little Buddha, Little Buddy.
Is
Little
it?
Buddha, Little Buddy.
I hope not. We'll banhammer you. Little Buddha, be safe out there, man. Try to stay away from those plays, brother. Those ones, I could give you the analysis on them and completely they play nothing to what I said. I promise you on that, man. The strike rate, the
thing with those plays, man, is that you can make money, but you gotta be fast and you gotta know what you're doing.
Yeah, quick scalps and then just be out, dude. But a lot of people are still in the 100,000 AMC narrative. You know, that's probably never gonna happen, man. You know, yeah, AMC. Adam Massive Con is AMC.
But you know, the AMC only Discord's still going.
Dude, yeah, I can't.
They're still with 100K
to the moon, dude. To the moon, bro. The moon was just, unfortunately, it was downside. You know, God.
I've been banned from that Discord for 3 years.
Really?
I told them it's not gonna happen,
bro. Like, dude. And I know people take it so seriously, man. But dude, Like, and they don't get it. They don't get it that we also pulled out, you know? Like, it's just, we were there too. Like, relax. AMC to your anus, says Mark Roach. Yeah, it is. Options. Moonshot mentality is a real deal, bro. Like, that's a thing. Can't do that, man. Can't do that. Stay away from that. But yeah, guys, please remember, I'm gonna start adding some quick little content here and there.
I remember Options from the AMC days. He was a troll.
Options, were you a troll on AMC?
Yeah, he was.
Dude, that's awesome. So you've always known.
He was a total troll.
Options, you totally knew the whole time that it was gonna go to zero. You trolled on everybody.
I remember people getting banned from Discords for trolling.
Options, you go. Bro. Hey, man, at least you were spreading the freaking truth, man. Damn. But what got you to say it? What did you do? Did you study its fundamentals and be like, you know what? These earnings reports, no, these are wrong. They're being manipulated. Mark Rose, I love you, buddy. Yeah, man. So, and a lot of people put such a negative connotation behind short, biased institutions. Dude, that's not necessarily the truth. Not everyone is. You know, it's just think about it like a police force, man. There's a lot more police in the ghetto. You can think of microcaps as the ghetto, you know. So there's gonna be oftentimes fools getting pointed at. It's like, yo, you know, we're gonna short you because you're probably just bringing negative crap into the markets, and then that short institution gets looked at like a predatory short every single time, and that's because there's longs holding there, right? So. Damn, sometimes we have to just give them the benefit of the doubt, even though we're long, and then start doing their DD. Like, start seeing why they shorted it and really take into perspective here why they went short, right? Because, dude, like the people, I don't know if it was Virtue who went short on Mullen first, and then everybody started calling on naked shorting on Mullen. But then we found out what Dave Misery was doing this whole time, that freaking bastard. He screwed so many people over and diluted more than even freaking what is it? Hellbiz, HLBZ. You know, he was just as bad as that guy, man. So, and if it wasn't for that short institution, we would never know. You know, so give it the benefit of the doubt, you guys. Okay, we really have to observe the financial markets in a different perspective here, because there are services out there that actually work for retail, but we actually blame them. Well, because I mean, I get it. You know, we're holding long. But their cause is actually to sacrifice the few, to in favor for the many. It's a typical thing, man. You know, you got to read. You got to read more too, team. Okay, read the Art of War from Sun Tzu. All right, you got to make your enemy you got to make friends of your foe. All right, you guys. It's options is saying, tell them what they want to hear. Psychological trading. FFIE was an example. FFIE rose like 300% and then dipped beyond its all-time lows and further. Once you thought that zero was in, nah, they introduced 2 zeros. FFIE was a freaking ridiculous play, man. Fools in there made so much money and lost it all in that same play. Dude, can't do that, you guys. Can't do that, man.
I think Mullen was worse, though.
Mullen was pretty bad, bro. Mullen was pretty bad. That sucked. That really sucked for retail. Damn. Options made all that money on the short. It's like, guys, you are basically working for me now. You know, just...
No, options is basically Joe.
Dude... Options, are you Joe Plus?
He's Joe.
Joe H is diet options. Dude, Joe is, man. Yeah, dude. I honestly think, man. No, dude, Joe H is completely long right now. He's long biased. No, but dude, options, yeah, dude, low key, bro. I followed some of your plays, man, and you're doing amazing. So I love it, bro. I love it. But yeah, guys. But thank you everybody for coming out. Let's go ahead and cut it here. We need to get some rest, right, so we can get a good trading day tomorrow. I'm thinking Meta can fall. I'm thinking Tesla has a little bit of downside to go until it really gives our huge thrust to the downside, right? So keep sharp. The triple witching expiry is tomorrow. Some economic data at open. So be mindful. Be mindful over how price action can react. Okay. Thanks, Mark, for sharing that detail here for Mullen. The investment of $1 million at $4 a share in March 2022 equals 250,000. Damn. Man, that shit went out the window, bro. It never came back, man. You thought that if you let go of this pigeon, it was gonna come back to you like a faithful servant, like freaking like Hedwig from Harry Potter. That thing's not gonna come back to you, man. Those are dreams. Those are hopes and dreams. Right. So anyway, team, I love you all. Thank you so much. Let me go ahead and tune out right now and do this a little exit strategy over here for y'all. Right. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios, team.
Where are you, Lorraine? He's gonna send his dad after me. Nah. No.